Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know you guys can indeed hear me. Hope everybody's had a fantastic evening so far. Looking forward to our COT report webinar. And I'm I love this class. This is my favorite class of the week, just because we use so much of the COT report in our trading and, it has everything to do with the scanner. And we made some cool updates this last week. So I'm excited to kind of dive into those updates a little bit more and the back testing of those updates. It shouldn't take too long tonight. Maybe, if we get through everything we need to get through, we might just go 20 or 30 minutes, however long we need. We were able to talk about a lot of things COT report related in the overnight and sentiment trading webinar as well. So, we'll just kind of go however long we need to go in this webinar tonight. But before we get started, as always, I need to remind everyone about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, so let's jump into this. So as far as the COT report goes, tonight I don't think we'll do a lot of basic training on the COT report, just because, well, we've done that every single week, right? And so if we need to do another basic training on the COT report, maybe we'll do that next week. But tonight, I just kind of want to dive into some of the changes with the COT report. Let me actually pull up the journal. Let's see, COT report journal. Yeah, right here. And we'll talk about this, and I'll show you what we've been doing here and how this works with the scanner. I think this is a pretty good fun class. A lot of people like to look underneath the hood and see what we're doing with the scanner. As far as I think a lot of people like to see kind of how it works, kind of. Obviously we're not going to share every trade secret in the call, especially because sometimes not everybody watching the call is a member of the program. So, but we will share at least a lot of things that are very pertinent to how and why we're doing certain things with the COT report and so on. Um, so as you guys know, we added this 5-week shift to the scanner, and it's awesome. So you've got two columns here. The first column, you can hover over it. In fact, I'll just make them bigger right here. So it says, I'm actually going to make these really big because we're just going to talk about these two columns right here. So it's the 5-week non-commercial COT signal and the 5-week non-commercial percent net shift. This is very similar to the commercial shift that we already look at on a week-to-week basis. The difference with this is that this looks at not just the commercial, but not just, it only looks at the non-commercial data, which is important because the non-commercial is your like large specs. Okay. When you go to like places like barchart.com and other places that look at the COT report, most of them are looking at non-commercial data. Okay. In fact, why don't I do that real quick? I want to just show you guys another cool place to look at COT report data. Yeah, right here. This is barchart.com. I haven't been to this site with you guys in several months. But if you ever want to see the way they look at COT report, it's actually almost the exact same way we look at it, minus it's just the way they display it's a little bit different. But you can filter this by, oh, I have to log in. I forgot. You have to log into their site. Um, do I want to do this here? Let me pull this over here. Um, Let me log into their site real quick. I'll show you what it looks like. Yeah, here it is. Okay, I'm in. Okay, so here's their site. So when you look at the uh, COT report over here, they let you change it by commercial and non-commercial. And commercial, we've already established, is the large hedgers. These are your um, people who use the COT reports for the purpose of operating their business, and their hedge funds as well. But hedge funds are not the companies we want to follow. They're not the participants that we want to follow. It's the large specs. Why large specs? Well, if you think about it, I'm a speculator, you're a speculator. Why are we speculators? Because I don't use Forex to operate my cattle business or my business out in the Midwest. I don't have a business out in the Midwest, right? So, what is my business? I'm a speculator. I'm only in the markets because I'm trying to make some extra money for me and my family, right? So that makes me a speculator. And these guys are the same thing. Non-commercials are the same thing. They're the large speculators. And so that's why we generally want to follow what they're doing over a more macro perspective. The problem with non-commercials that we ran into in the past is that when you'd follow non-commercial data, um, is the week to week changes have very subtle effects on the market, generally speaking. It doesn't seem to have like this, like overall, like it's almost negligible, right? Like if you look at the week to week shift from non-commercials just from last week versus this week, it's negligible. It almost doesn't give you an edge. And so I kind of actually scrapped non-commercials for a long time, like for a year or so. I kind of scrapped it, went to different things. But then I got this idea like, hey, what if we look at it from more of a shift, but like that's over several weeks to get a better perspective. That's an actual picture of what the banks are truly doing. And that actually, believe it or not, ironically gives you a better weekly signal than the weekly shift. Who would have thought, right? Well, here's the logic behind it. So basically, if you look at their 5 week shift, then if the market goes against, like, let's put it this way, if you find a currency pair with tremendous backing over the last 5 weeks by the non-commercials, and the market goes against said currency pair for a brief couple of days, the chances of that market turning back in your favor are very likely. Okay, so that's the logic. That's like why this works. Is if you can find the handful of currency pairs that they have their eyes on and you can get a trade in that direction and then even build a position in the direction they want to go, that's the logic that makes the most sense. And it's crazy because you'd think the weekly shift would have more to do with what's going to happen in the next week. But what if that's a fluke? That's the problem. Like, what if the change from last week to this week is just kind of normal fluctuations of the business, but it has nothing to do with the direction they actually want to go? And so that's when I got this idea, like, what if we looked at it from a more like holistic perspective over the last, 4 weeks, 5 weeks, 6 weeks, something like that. I don't honestly know why I picked 5 weeks. It just made a lot of sense to me. And I did some back testing too. I'm sure the 4 week or 6 weeks would probably tell me about the same, but we just went with 5 weeks because that covers pretty much a whole month. Some months are a little bit bigger. Um, it's like 4.5 weeks, 4 weeks and a quarter is a month. So I just decided let's go 5 weeks to make it basically a full month plus a little bit more. Anyway, that's why I did that. Super professional, right? No, I think it's a great idea. I mean, obviously it's working, but I know other places that will actually look at the shift from like a much longer perspective, and we might end up doing that too. But I think looking at it from a 5 week is perfect because that's the thing. If you can find the ones that they're really hot on over a 5 week period, it seems like you're on to the right track. You're finding what they're really interested in. So here's the way I see it. If a market goes against what they're trying to do, chances of that market coming back later in the week are very likely. And I love that because that means there's more flexibilities for people like you and me to go in there, and like you and I can go into the market and we can pull out really good trades and really good. I was just looking at my CAD yen trade, guys. It's insane. Like now it's awesome. Like it was kind of bleak yesterday. Things weren't looking too good last night. And then just all of a sudden, just 24 hours later, just really good things start to happen with it, which is really, really cool. Um, And so you kind of have their insurance, if so to speak. I don't know if that's a good way of putting it, but that's why I really like this 5 week a little bit more in particular, because when you look at the 5 week, this is what they're interested in, right? Like if I filter it like this is what they want right here. These 3 or 4 or 5 pairs, this is what they're really after right here. And so for me, I'm like, okay, maybe we'll really focus on those ones. And same thing with the short ones, Euro CAD, Aussie CAD, USD CAD, which by the way, the Aussie CAD last I checked was doing pretty well. We posted this Aussie CAD trade the other day, um, and that came up triggered just perfectly our entry, and now is on the way. So anyway, it just kind of goes to show again, this is what they're after. Anytime this thing goes up, they're interested in sending it right back down. Um, it's just crazy to see how they do this. Really actually kind of crazy to see how they do this. So if you can combine this with other components of the COT report, like the long-term data, which is also non-commercial, but it's the long-term signal, just so everybody knows, is also all COT report, but the long-term signal is essentially not what they've shifted to or from. It's just a
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
imprint of where are they as of the last report? Do they mostly have longs or do they mostly have shorts? And if they mostly have longs, then we're going to issue a long-term long signal. And that's as simple as that component or that column of the scanner is. When they issue like when they have mostly shorts, um, not necessarily a shift, but if they just simply have more shorts, we're going to issue, okay, that means the banks are selling, so we're going to sell too naturally. That's all that's telling you. Anyway, so I love this, guys. I think this is really, really cool. And so I think as far as picking a weekly signal, this is actually a more superior way to pick your signals for the week. We have given the overall signal a little bit more like, how do I put it? When I grade which overall signals we're going to take for the week, when I grade this right here, um, we do look at the shift in 5 weeks a little bit more than say like maybe say like the long term, right? Long term still important, but it, I'm going to say that where they're shifting is far more important than um like them where they are currently. It's the same thing like I used to do this when I used to work for a bank and I used to do mortgages and I used to help people with car loans and I used to help people consolidate debts and things like that. And I would be watching what rates were doing, like if rates were going up or going down. One of the things that I remember happening is like when rates were going up, I remember people used to ask me like, "Hey Steve, do you think that it's a good time to lock in my rate because I hear that they're going to raise rates." Well, the thing is, a lot of the times, by the time you and I get the news that rates are going up or going down, the market's already pricing that in the bond market before we even get a chance to um, speculate on it. So the way the markets work is they speculate the news or the suspicion more so than the actual fact. Okay. So I remember back in like when I was trading back in like 2021, end of 2021 and early 2022, there was speculation whirling around that rates were going to go up. And remember this time, I don't know, it's been a while now. It's almost been 2 years now, but I remember this time when rates were super low at zero for the Fed. The Fed funds rate was basically zero. And then home interest rates were back in the mid twos. Do you guys remember those days? Isn't that crazy? It wasn't too long ago. But yeah, that used to be a mortgage rate, like mid twos. And then you had car loan rates that people 0%, 2% on a 72 month, it's just 84-month car loans, crazy stuff. Um, but then there was this like speculation of rates going up, like, hey, we might raise rates. So before the feds had actually raised their first interest rate, mortgage rates were already on the way up. Before they even did it, before the actual Fed funds rate was adjusted, it had already happened, right? Like it was already going up, right? Now, what's happening now? Rates are at the highest level they've ever been since like 2008 or '07, I can't remember. And we're actually starting to see some cracks in the bond market again. But not cracks. We're starting to see bonds start to go up again now that there's speculation that rates may come down because there's an inverse correlation between debt, so bonds, right, and interest rates. So when bond prices go up, rates are going down. Um, so the feds haven't even lowered the rates yet, but because there's speculation that sometime this year there will be lower rates than them where they are now, bonds are already starting to go back up again. We're already pricing that in, right? And it hasn't even happened yet, right? Because mortgage rates used to be at like 8% at their highs. Now they're down into the low sixes, right? But the Fed funds rate is still at the highest it's ever been. So why are we down from 8 to 6? Well, it's because the market's pricing it in. Now, I'll tell you this, if that does not happen, right? Let's say the Fed does not lower the rates, then you'll see the false speculation go the other way even harder because they'll realize that they priced something in that shouldn't have been priced in, right? So that's just how stuff like works. So when people would come to me and say, "Hey Steve, should I lock in my rate?" I hear they're going to do this. It's like a lot of the times they've already done it, right? Like um the market's already priced those things in before it's even happened, which is kind of interesting. That's kind of how I view this right here with the COT report and the 5 week shift is I see this as kind of our golden nugget. Like it's like saying, "Hey, this is what they're pricing in before it's actually priced in. This is their plan. This is their game plan is that, hey, when you filter this by the most positive or the most negative, you know which way they are trying to go. So if you see during the week, like the CAD yen as an example, if that thing goes against you, if it goes down when the expectation is for it to go up, well, yeah, I'm gonna be excited to see that thing. I'm excited for it. If it goes down, I'm excited to buy it up because it's gone contrary to what the speculation is. That's an opportunity for me, right? So I really like that. I've programmed the scanner. I programmed the scanner to regard this as pretty important, especially when it starts to get over like 20%. So if you start to see these numbers get over 20% or so, it's like 21, 22%. That's when we really start to care about this shift a ton. Same thing on the opposite side. If you start to see a negative shift that's below like um 20, 22%, something like that, that's when you're going to see these really start to shine. And you want to look for opportunities in those directions. I had a guy reach out to me this week. He it's so sad. He didn't like the scanner because he said it was too lagged for his liking. Like he thought the data in here is kind of lagged. I want to just talk to those folks for a second. I see your concern because obviously you're looking for a scanner that would be very helpful for your scalp trading, right? Because if you're looking for a scanner that's going to tell you which way the market's going to go in the next 5 minutes or the next 15 minutes, that, this is not your scanner. You need a different scanner if you're looking for something like that. So I'll just be, blunt about it. Like if they're going to be blunt with me, I'll be blunt the other way, just saying, hey, this is not the right scanner. If that's the scanner, if you're looking for a different one. So this data that you're looking at right here is to help you figure out like what swing trades you're going to take. I believe that this is the ultimate swing trading scanner. I've never seen something better than this. So I'll stand by that. As far as a scalp trading scanner, this could be one of the worst scanners out there. So I'll give them that. Yeah, I'll give you that. It's like I'll say it right now. It's one of the worst scalp trading scanners out there. Um, as far as like a consistency basis goes, right? Like I think you could use it for scalping, but I wouldn't say that I would go into the markets. Like I would never use this to be like, okay, I'm going to try to figure out which direction I'm going to go for the next 2 hours. Probably not a good idea. But if you're willing to build a position over several days, maybe even a week, or perhaps even longer, this could actually have profound effects and you could actually do very, very well for yourself using this scanner. So I just want to make sure it's very clear, the uses of this scanner because there's a lot of stuff on it, right? Which, by the way, I know there's a lot of stuff, so it could be confusing. At the end of the day, all you really have to worry about is just the overall signal. Okay. And these are the currency pairs you should be building positions into over, like I said, like a week minimum. Okay. At minimum, if you're going to use a scanner, I would say you need to be holding a trade for at least a week. Okay. Um, if you happen to catch it right, you could close a trade within like 3 or 4 days. But it's not going to be your scanner if you're trying to close a trade within the next couple of hours. So yeah, in that sense, it would be considered like lagging data. I get it. I'll give you that. But again, it was never intended to be used as a lagging indicator on a scalp trader's journey, right? This is very much a swing trader's journey here. Um, and somebody who's just looking for something they can take a trade with at the beginning of the week with a high likelihood that they'll be in the right direction by the end of the week. Okay. Okay. Some other things too, guys. Let's see. I wanted to just highlight this. One of the things that popped up on the scanner this week, from the COT report is the crowded market indicator. So we don't in fact, I feel bad for the crowded market indicator. We've moved him off into the abyss over here. He's now on the very right-hand column. He's like lonely now, and we keep scooting everything over, and so he's like falling off the scanner. No, he's important. So let's look. I just want to review the crowded market because we actually do have several currency pairs that are now in crowded market phase. So anything that is here, let's actually let's give him his space right now because we keep scooting him off the scanner. I'm gonna let's see. Can I give him some room? Let me move these over. Okay, let's see. Can I? Oh no, it's not gonna work. Okay, never mind. Yeah, poor guy, right? He can't really shine the way he wants to shine. Um, okay, anyway, so let's talk about him. So part of the reason why we haven't used him a lot is because he hasn't had a lot of signals for us recently. Until now, we actually do have some things to discuss here. I want to make sure it's very clear what the crowded market does. So, crowded market basically tells us when the banks start to have a really big position on something. Okay, what does this actually mean? So, for example, on the euro yen right now, if we were to actually look under the hood, in fact, I'll take you straight to the hood here, guys. So if we go to the data and I scroll over all the way over here, this is where the crowded market stuff happens. So we can see, like with the euro, 64% of all outstanding positions held by the banks right now are long positions on the euro. Okay. So the banks do have a pretty big euro position. They actually used to be a lot bigger. Back in November, it was like 80%, 70%, something like that. Um, the yen has an even bigger short position. So look at this. The yen is 73% short, almost 74% short by the banks. Um, so that means the banks are heavily in a short position, okay, on the euro. Um, so obviously, if you think about it, you're like, okay, well, they're buying the euros and they've got this big long position on the yen. So wouldn't we want to buy the euro yen, right? Wouldn't that be the idea? Well, the problem is with that is if we just only look at that information, it doesn't tell us the full picture. So once the market reaches a certain threshold, the banks generally have like once they start to have most of the long positions and once they have most of the short positions on the other quote currency in the currency pair, then we issue what's called crowded market and a crowded market alert. That's when you get 5 out of 5 stars. And it's basically just telling you and telling us that, hey, the banks are really big into this position. They're going to have to start exiting. They've probably made all their money on this euro yen. Be ready because the euro yen might start falling soon, right? That's what the crowded market actually tells us, right? So if we come over and look at the euro yen, you can see that over the last here, let me show you a higher time frame. Let's go to an hourly. They've actually generally been up over the last little while. So the banks have been winning this game. They've been buying this, but now they're starting to get crowded. So that means that, beware that they may start to drop this soon. Um, it doesn't mean that it will. That's why you don't want to use that as a standalone indicator. I'm not a big fan of standalone stuff just because I've been burnt so many times just by trading like a standalone thing. So I try to combine my analysis um, with other metrics that we have from the COT reporter from sentiment. So this guy is at risk of potentially pulling backs at some point. Now he could totally. I've seen some crowded markets go up significantly before they come down still. That's why I'm saying you don't want to just trust it immediately because sure he could come down right away, but it's totally possible that he goes up a little bit more and then comes down later. So just be aware of that. That's totally a possibility with crowded market. But when this happens, we actually do something unique on the scanner. I want to point out when you get crowded market, we actually immediately start issuing a reversal in the long-term signal column. And so we've already programmed this to detect that beforehand. So like for example, the euro yen, we know that overall they're buying the euro yen, but the thing is they're starting to get crowded. So we've issued a long-term strong sell signal. In the meantime, sentiment is still a strong buy because most retail traders are short. So until these two agree with each other, it's probably going to create just a neutral signal in the meantime. Okay, so the overall signal on the euro yen is going to stay neutral until the retail gives us the green light. Once we get the green light from retail, and the crowded market signal continues, that's when we'll finally have the green light to swoop in there and pile into positions. The other thing that will help us too is if we start to see this 5 week change, also start to shift negative. If we start to see that, that could also help us get into the signal a little bit sooner. But right now, um, it's in crowded market phase, and so we have to be aware of that. But it's not time to buy or sell right now just because we haven't gotten confirmation from sentiment or the 5 week yet. So that's kind of cool. Some other ones, like everything, actually, everything in crowded market is currently a neutral signal. Oil right now is getting kind of crowded in its short. There's a lot of banks that have short positions on the oil. So that's why we're issuing a strong buy as far as the long-term signal goes. So I hate to say that, but oil probably will. I enjoy the prices we've got right now because it has come down, right? It has come down back in, used to be up in the $4 and $5 a gallon range, and so enjoy it. Um, but the banks are really crowded in the short position, and they're going to have to cover. And as they cover, that's going to send oil up over time on oil. Same thing with the pound yen, just on the opposite side. So the banks have a pretty big long position on the pound yen, so they're going to have to close their longs, subsequently go short. But that's not the case yet. So we have quite the conflict here that I just want to point out. Um, the crowded market is a strong sell. Um, but when you look at the 5 week change, it's actually quite positive. Okay. So pound yen, if I actually had to pick anything, I'd say the pound yen is a little bit more of a buy currently, even with the crowded market. And sentiment obviously is a strong buy. But just because when crowded market happens, I've just kind of learned not to bet against it. I really hate betting against crowded market. So when this happens, it just kind of puts a wrench in that currency pair's overall signal. But that's what that means. I don't really worry about the stuff that's 4 out of 5 or 3 out of 5. It's really when it hits the 5 out of 5 where I'm like, okay, yeah, that's a really crowded currency pair. Um, Let me show you this. When you look at like the CAD yen, that's why I love this. I love this pair so much right now because it's only 3 out of 5. Okay. So if it's only 3 out of 5, that means they're not really crowded. Yes, they have a bias. Yes, the banks are buying the CAD yen. We can indeed see that because they do overall have a long-term buy signal right there that you can see. And they do have a bias because there's 3 out of 5 stars, but they're not crowded. That's the thing. They're not crowded. And look what's happening right now. They're substantially increasing at a very, very fast pace. So they're increasing their position very quickly. They're not crowded yet. And retail is, let's see, retail, yeah, retail is only, oh yeah, retail's only 65% short. So that's why I was saying earlier in the last webinar, retail will probably bite the CAD yen as it continues up. Like they'll probably pile into more shorts on the CAD yen. And they're short for sure, but they're not that short yet. So I could totally see a scenario where the CAD yen over the next several days, perhaps even couple of weeks, really just takes it out of the ballpark here. Um, so be prepared because there's probably a move similar to this. Here, I'll show you. I think we're in for, let me show you what we're in for. I think based off of everything I just showed you guys from the scanner, we're probably due for some move like this. I'm going to draw it out. We're probably due for this type of thing right here. Okay. Something to the tune of this is what's coming. And I don't know if that's going to happen right away the way I drew it out. But yes, that is a substantial move from its bottom to top. Like that's 200 pips from where it is currently. That's still another 150 pips to go. Yeah, it's definitely a huge opportunity. So that's why I like that it's not crowded. It's not in crowded market phase, which means that it has the potential to continue to rally out of here. Like the fact that they're increasing this much and it's not crowded yet is awesome. It's not crowded yet. That's huge for that one. Um, Another good one is like this NZD yen. They're increasing quickly. They're not crowded yet. That could be a good one going forward. Franc yen could be good. It just doesn't have a huge shift over 5 weeks. Um, I will show you that. So Euro pound is actually clutch. This could, I'm not saying it will because it's actually at a major support level right now, but the Euro pound could actually have a major move to the downside. Um, it's not crowded. It's 1 out of 5 stars. There's no bias long term yet. That may change if this continues. The Euro pound could become a significant player going forward. We'll have to see. But yeah, this is kind of the one I'm really focused on right here on that CAD yen. And then let me actually show you the Euro CAD real quick. So Euro CAD, okay, this is another one too. The Euro CAD could come down sharply too because it's 3 out of 5 stars. But look at this. The banks are still biased long on the Euro CAD. So they're shifting rapidly, but they're still overall long. So, um, which is okay, but what that means is that the banks are like they're switching away from that quickly, which means there's a lot of room for them to go the other way if they want to go the other way. And retail hasn't even switched yet too. Retail is just at basic 51.49 is where they're at right now. So they could basically dictate whatever they want with retail traders. Whatever way they want to go, they'll get it. My guess is they're gonna wipe them out as they send the EuroCAD lower, and these retail traders are gonna get absolutely smacked in the process. Okay. Um, but yeah, that's and I showed you guys earlier, and we'll probably start wrapping up. Um, the this I showed you this like we already have a price action trade on this one, so you can wait for it to trigger. You're also welcome to take any other trades you want to take here. I think you'll probably be fine if you just wait for it to trigger. But there is a nice like triple top up here going on. It also appears that we have a descending triangle going on. Break of structure potentially happening very soon here. It already kind of has happened. We just haven't finally broken through. This is just holding on for dear life right here. I think they're enticing retail to buy this right now. If I had to guess, I would say most retail is piling into buys right here. And if you're a bank, that's exactly what you need right now, right? Think about it. For every buy, there's a sell. For every sell, there's a buy, right? There has to be an opposite transaction, right? So if you're a bank and you want to sell, you need buyers. How do you entice retail buyers? You put the market at support. Keep it at support so that retail will get enticed. Because in the last webinar, we talked about what do retail traders want? What do they want? They want a discount. We all want a discount. How do we view discounts when things are at support? How do we view premiums when things are at resistance? And the banks love that. They feed on that. So I think based off of what we're viewing here on the scanner and based off of what I'm seeing here, they're probably at some point going to get their way with this, right? They're trying to lure them all in into buys right here so that ultimately they can just like, okay, I'll give you another example, guys. I'll wrap up on this. This is a good example. What's about to happen, I think, on the EuroCAD is like, okay. So I found this really cool website. Have you guys ever, in fact, this is a fun thing. This is kind of like off topic, but on topic. Have you ever heard of O Search? Um, the O Search tracker. This is kind of cool. I found this the other day. I don't know why I went down this rabbit hole, but this is like a tracker of like sharks and fish all around the world, I guess, that they're tagging. Okay, so there's like I've been following this shark over here. Here, what's his name? I forgot. What's his? Oh yeah, Keji, this guy. Anyway, so I've been following this shark around. He's this is like his this is everywhere he's been. The shark's been like over the last 2 years. And so they tagged him like a couple years ago up here by like Maine and Nova Scotia. And then he's been coming down and making his rounds back and forth each year. And that right now he's hanging out down south of Florida. And this is what I wanted to show you guys actually. Not this is kind of cool, just kind of fun to see. But notice the terrain right here in the ocean. I don't know if you guys can see this. It says West Florida Escarpment. So in the ocean, the ocean floor is not flat necessarily. It is flat in certain areas, but um, in the ocean, there's canyons, there's like cliffs, there's convergent boundaries and divergent boundaries all throughout the ocean. And this shark and a lot of sharks that I've noticed like to hang out at these boundaries. Why is that? I think there's a lot of food right here. Um, and they've got like different menu options if you're a shark or a whale. I think that's what's going on, but this is what I'm trying to explain with the EuroCAD. So right now, the EuroCAD is at this like breaking point. It's like a shark that's waiting at the end of the cliff, this Florida escarpment, right? And the prey doesn't realize that there is an absolute cliff that's just about to take place at some point in the future. I don't know if it's right away or if it's in the next couple of days or even the next week or so. But I do know that there's probably a good move coming to the downside here. And so when that happens, all of the stop losses of the retail traders below this are going to get hit right here. And so, um, anyway, I've noticed this guy, this shark, he doesn't like to go off of anytime you can kind of see right here, he doesn't like to go off of this cliff. He went a little bit off of it for a second and then he came right back. But he basically just stays on the more shallow waters, right here off of the west coast of Florida. He likes to stay there, I guess. Anyway, that's kind of anyway, kind of a fun example. That's called osearch, .org. If you ever want to just go see, you can click on different animals that they track. And it's really kind of fun actually to see where they go every day. Some of them travel pretty far in just a single day. Some of them don't really go very far. Um, yeah, kind of fun to see actually. Anyway, guys, so my game plan with this is yes, my game plan is to sell this. I'm expecting a move to the downside on the EuroCAD. I'm hoping that our little price action trade triggers and that we can all get in and soak in this opportunity. Um, that's what I'm excited and looking for right now. Um, just be aware that, no matter how good something is, just realize that there could be moves to the upside too. Like even in this process of coming down, like the banks have been selling this for a while, there's still been significant moves to the upside. Like this was a pretty good move to the upside before it came down. This was a pretty good move to the upside before it came down right here too. So just know that these are all on the table before this thing comes down. But I just view it as an opportunity. So if the market does go up, I'm just expecting it to um, eventually follow suit to the downside. See, Mohammed says 5 week strong sell on pound CAD seems to be playing out pretty well. Oh, that's awesome. Let's take a look. Yeah, um yeah, right there. It's got a 23.52% negative shift. Let's see where the pound CAD's been. Yeah, sure enough. Um, it's been coming down, that's for sure. At least since right here is when it apexed in the end of January, right there. And it looks like they've been selling this. They started selling this at least back in early January is probably when they started. So you can see that they were early to the trade as well. I don't know if you and I would have gotten a sell signal back then just because that's when they started. Now we've really got their jets going. But that's what's interesting. The fact that they were willing to start selling back over here, and now that they're just getting back to break even on their initial sells, tells me that there's probably more room for the pound CAD to go down as well. Similar to the Euro CAD, right? There's actually quite a bit of room for this guy to come down. The next level of demand is down here, and that is quite the ways to go. They don't realize that they're at the edge of a cliff. I think a lot of retail traders don't realize that that's what's next up on the docket. All right, guys, I'm going to go ahead and wrap up. Unless there's other questions, we'll go ahead and wrap up. I'll get this recording posted so you guys can come back and watch it if you want to. Okay, all right, guys. Appreciate each one of you. Thank you for coming. Have a fantastic evening, and we'll see you guys in the next webinar.